things we do, and unique things we know. So I think everybody's familiar with the term moats. Moats are driven by intangible assets, but let me give you some context around that. Okay, so first of all, that's a question for everybody, and so feel free to weigh in here. How can we possibly measure the premium placed on knowledge-based assets or intellectual assets in public markets? Anybody? There's no wrong answers here. Live dangerously, folks.
So the market cap of the company divided by the net asset, or subtract the net assets?
Yeah, look at the, how about the median market to book value ratio? So market value, so this isn't a course on valuation necessarily, but market values we can get at an instant in time in the public markets. For example, book value is what your accountants place as a value on your company. And you regularly depreciate things. And we tend to look at a lot of life and business through accounting lenses. But that said, there's a huge difference between the two. So let's take a look at what's happened over the last 50 years. If you remember, for any of you that are as old as I am, Peter, I know you've got this, you were born the same year as I was. Back in the 70s, the market to book ratio was actually below 1. You could buy a company, break it up, sell the parts for more. That hasn't been the case since in 93, you were pushing 2, and today you're sitting just a little over 4. So what does that mean? Let's give you a picture. If you were to look at the components of the S&P 500 market value, it means that since the 70s, we've now reached a point where 80% of your average company in the S&P 500 is represented by intangible or intellectual assets. And so it's challenging. Look at companies and just look at their structural assets and try and understand what they'll produce. And certainly this is a very different picture depending on which industry sector you're looking at. So let's talk a bit about what's in an intellectual asset portfolio. So many people think about IP, and I think that's only half the picture. When you talk about competitive advantage, intellectual property are a certain set of working tools, but you need to add a lot of other things to get a full picture. So intellectual property are things that you get a government grant on, a patent, a copyright, a trademark, mask works, plant patents. On the other hand, trade secrets, know-how, show-how, privacy rights to some extent, unique relationships with people and unique practices you have are either tied down through internal know-how and secrets you keep, or through contracts of some sort with others that are in your value chain. So IP, patents, trademarks protect names and logos, copyrights protect expressions of your ideas, designs protect industrial products. I went past patents, that's for anything that's functional. Mask works, circuit topographies, or plant breeders' rights, protecting plant breeders. So that's the IP side of the equation. Now let's look at non-IP, trade secrets. Many people use these words differently, so be aware. I think the most important thing you want to do with any company you work with is make sure that everybody's singing from the same song sheet. They all speak the same language and think about the same words the same way. I regularly work with companies where the executive teams don't see words the same way, and simply by getting them onto the same page, they can go better, faster, and cheaper. So trade secrets are, for me, technology assets or business assets that are thoroughly kept secret. Know-how is not necessarily secret, but not generally well known or understood. Your unique value chain relationships are captured in agreements such as channel partner agreements or exclusive supply agreements. Licensing in or across is an agreement with others looking at getting technology or rights from others. Licensing out is an agreement with somebody where you may be looking for adjacent market opportunities. Now, the first 5 are all pieces of intellectual assets, but I don't necessarily include economies of scale or network effects as assets. Those are the results of strong competitive execution, not the means of getting there. So why does it matter? Well, let's take a look at IP theft. If just IP alone, so for intellectual property theft, if you go online, I think all of us did in the last few days, how many of you recognize that 40% of what you see on online marketplaces are fakes? 35% of what you see in a search engine search is going to be fakes. Advertisements, 1 in 5 are fakes. There's a lot of theft out there. So what can we do as companies? If you're doing due diligence, you might want to, depending on what stage they're at, look at what they're doing to monitor for ripoffs, how they're managing their budgets and risk managing it, so you can spend a lot of money policing, looking for theft, but it may not be always worth your effort. Understand injunctions. Make sure people understand that if they have a serious, important brand in the mix, it can take years to get through a litigation process, but injunctions can happen very quickly, and the brand damage that can be done by people selling gray market goods into your marketplace is enormous. So I'd make sure people understand and know how to use injunctions. And last but not least, I'd say make sure they have a review their intellectual asset management practices on a regular basis. So let's take another quick quiz question, guys. So guys and ladies, let me know, what do you think? Out of these two industry sectors, which one has the highest earnings?
I'm gonna say software.
Okay, anybody else? Anybody want to side with me on the automotive side? Okay, these numbers were taken in 2000, but they're pretty well, they're in line today as well. The automotive sector has 10 times higher earnings than the software sector. But the major difference is the way they're structured, and they don't actually directly sell their intellectual assets. That's a substantial difference from the software sector, where they're directly selling their intellectual property, intellectual assets. Let's take a look at a few numbers. So earnings 10 times higher in the automotive sector, structural assets 5 times greater than the software sector. They do have significant IP, it's brands and patents particularly, but they aren't directly licensed. On the other hand, the market cap for the US software sector is 3 to 4 times higher. And a big piece of this is because of how efficient the business model is in that industry, due to the fact they're selling the IP directly. Okay, and that came from PricewaterhouseCoopers in 2001. It's a little dated, but it's still the same today. Let's look at a quick business case study around IBM's business model and what happened to them. IBM's strategic business model changed in the early 90s. They intentionally went out. This was during the days when large corporations were starting to think about open innovation and were reducing their in-house R&D efforts and dramatically increasing their M&A activities. It's still the case today that they operate this way in most cases. When IBM did this, they returned a 50x return over a decade. Their patent royalties went from 30 million to 1.7 billion in that period. And what is, I think, fascinating, and small businesses need to pay attention to this, is how lucrative this small business unit can be. With a very small overhead for their licensing activities, they were able to produce 17% of IBM's pre-tax profits. So quiz time again, guys. Okay, ladies, tell me, what do you think? In this picture, I'm dating myself here again, but I used to play Mousetrap. Is anybody familiar with this game? It's a board game where, as you go around the board with the pieces, you build yourself a fancy mousetrap that will catch your mouse on the board, I guess. In any case, can speak up and tell me, where do you see intellectual assets in this game?
Design.
Yeah, the design of the board.
The
board, the pieces themselves might have had, you could possibly get a trademark on the shape of the pieces too. Because the shape of packaging, at least, you can get trademarks on. Anybody else?
The actual name?
The name, yeah, trademark, trade name there, yeah. How about a trade secret? Where would they have had a trade secret? That's true for, think of the mining industry too. People don't think of intellectual assets for these organizations, but nobody would publicly disclose their ideas before they took it to bat publicly. You wouldn't tell people what your gold claim was until you're sure you own it. And you also see a utility patent here. The mousetrap itself was uniquely functional in nature, and you were able to get a patent on the device. Anyway, so just a quick walkthrough of, you see intellectual property everywhere. And in that example, there, had many types. How do you directly monetize intellectual assets? Well, many of us know about licensing deals, but think about it in a broad context. You're going to see clauses around managing intellectual asset confidentiality agreements and such, non-disclosure agreements in various types of deals. A strategic alliance, for example, that's a complex license agreement as a simplification. Joint venture, where you create a separate corporate entity to go and do something collaboratively. Perhaps in M&A agreements, you're going to be looking at IP considerations. And your initial public offerings, you'll see them. Private auctions, you see those coming up. Seeing those in particular in situations where people were divesting large portfolios. Think Nortel, I think their portfolio sold for $1 billion plus. Patent pools, many people, I hope you're aware of patent pools, the MP3 consortia. I think the one of the more interesting ones I looked at this year in patent pools was the 5G consortia, which so these are groups of largely large corporations that pool their IP together to be able to enable control positions. The group that control the 5G consortia estimate there are somewhere around 500,000 patents on 5G related technologies on your telephone alone, and they control about half of them. But by controlling half of them, I don't know anybody on the planet who would go up against the combined might of Apple, Samsung, and the others that are all engaged in the patent pool. Tax optimization is a way to monetize intellectual assets from time to time. And the one I like, I'll talk briefly about securitization. Does anybody know how David Bowie managed to make an extra large pile of money on his music catalog? Live dangerously, guys. No takers? How about look up the David Bowie bonds? He securitized his entire music catalog and sold bonds to people that would love his music, and was able to make a fair amount of money on doing something unique with a music catalog. So big picture though, let's be realistic. Not all intellectual assets can be directly monetized, right? So when you look at how intellectual assets play out in your business, it's in my mind, and this I guess comes from being a foresight EIR and working around business model canvas and such over a long period of time, but sustainable advantage comes from uniquely controlling and managing your gain creators and pain relievers, if I may. Okay, so let's look at where do you find all of this, all of the different types of intellectual assets wrapped up. Well, when you look at the way people discuss brand value, brand isn't just about trademarks, although trademarks are fundamental to maintaining a strong brand. The brand value includes all forms of intellectual assets in the mix. Right, so let's take a look at some of the winners and losers over the last few years in brand value. So this is the 2008 scorecard. I hope if any of you are interested in this, you can find Interbrand publishes this every year. They call it the Global Brand Scoreboard. And take a quick look at the top 10 in 2008. And now here's the top 10 in 2020. This shifts quite a bit, and it's all IT at the top. Okay, so one more little look at brand value. And so brand value, again, capturing all of your intellectual assets in the mix. There's a small company in Europe called Vivaldi Brand Leadership I followed for about 30 years, and they do some interesting work looking specifically at brands. And they ask this question. And so what do you think? Do public markets pay a premium for brand leadership?
Yes.
Anybody else? Absolutely.
Yeah.
So this study, it's an older study, but it's similar today. And I'm not suggesting you go take all of your stock portfolios and move them around tomorrow, but give some thought to this. It's interesting. 320% higher returns for a basket of strong brands over returns of the baseline, which was this S&P 500. So let's talk now. Let's turn the channel a bit and talk a bit about some famous people who talk about competitive advantage and try and link it into intellectual assets. So everybody knows Jeffrey Moore from talking about the technology adoption life cycle. What was it that Jeffrey Moore wanted people to measure? Does anybody remember? He wanted to measure two things. He talked about a competitive advantage gap, and that's the value of your firm's differentiated offerings when compared to all reasonable available alternatives in the market at any point in time. And the second piece is an investor-specific piece. Competitive advantage period is the length of time investors think it can hang on to that competitive differentiation. Now, it's great to read these books from Jeffrey, but I tend to find these two things can be rather difficult to measure. And so, bear in mind what they are, but take them with a grain of salt. They can be challenging. And bear in mind that all of these things, in terms of how you look at it, change depending on where you are along the technology adoption life cycle. Your ideas about intellectual assets and competition early on. Let me ask a test question. Does anybody remember what was it that Apple, what market type did they sell into when Apple sold their very first computers?
They sold the hobbyists.
Hobbyists, thank you. Yeah, right on the money. Because you had to create the market. So for them, that was, the journey in the war at hand at that point was about getting hobbyists to care. When you change and you go into the steep period of, your challenges here, can I contain my cash flow and manage the growth? And when you deal with late adopters, it's another story again. In any case, recognize that your look at competitive advantage and how to use intellectual assets is going to change depending on context. So here's Michael Porter's books. I'm going to flag the two. So many people, if you've taken an MBA, you may have even been asked to buy Competitive Advantage or Competitive Strategy by Porter. But I'll flag a book by Joan Magretta that I think is the best summary of Porter's work available on the planet today, and it's called Understanding Michael Porter. And if you haven't got it or you want a quick look at what Porter's thinking was all about, it's a very good read. So in Porter's work, he points to three specific things that are, here I got the iceberg. Book values, the top of the iceberg, and your intellectual assets are everything that give you ballast. Competitive advantage comes from being unique in your category and the ability to sustain three things: a higher price point than everybody in your category or everybody in your segment, a lower cost structure than everybody in your segment, and then barriers to entry around must-have or prized features that customers have to have. Everything in a competitive advantage context can fall into one of these three buckets. And I think you get your executive teams or the people we're looking at investing, if they understand these things, then I think they'll have better ability to build competitive advantage over time. So there were three, Porter innovated and did a lot of different things in business, but there's three things I'm going to flag today that come out of Porter's work. And I've got is Kirk Hamilton online? Don't know if you're there, Kirk, but anyway, Kirk certainly lives and breathes value chain analysis. And when he does his investment analysis, thinks it's very important to make sure the entrepreneurs can clearly articulate an understanding of their value chains. Okay. The next piece that I'd flag would be you can learn a bit about Porter's 5 forces analysis. Now, this looks at rivalry from 5 different directions. Many times when we're talking to companies, they can tell you about their direct rivals, but dig into taking a look at whether they understand the other 4 components of rivalry: the threats of new entrants, what are they doing to prevent that? Threats of substitute products, are they really clear about what the alternatives are? And then there's the bargaining power of suppliers on one hand and the bargaining powers of customers on the other. All of these things are important aspects of the overall picture of your competitive advantage. And the last piece that comes from Porter that's worth mentioning, and although it may not sound sexy, I think it's one of his best things, is the activity-based costing. Giving you a deep domain knowledge and understanding of what your cost base looks like can absolutely give a company an advantage over others that don't. Activity-based costing, they consider an activity to be any event, unit of work, or task with a specific goal. And most commonly, it's known for being able to help people with better pricing decisions. So those are just three of Porter's ideas. And what I'd suggest, I'll walk you through this, but what I try to do with companies is get them to think about a strategic framework that looks at your inputs, your processes, and your outputs. And in this case, we're developing a set of language ladders and review that looks specifically at our ability to build competitive advantage in a company. So the inputs for building competitive advantage are first the people. You can't do anything without your people. Second, the relationships you have, not just with people, but with all the other organizations you do business with. You might, that exclusive supply agreement I'd consider as a key interesting piece if it gives you an advantage. And then there's all the intellectual assets, the portfolio of assets that you actually have. You may have some patents, you might have some trade secrets, but it's in combination. Those are the things that are going to drive your ability to build better moats. Then there's processes, your ability to manage processes in your organization. There's two types of processes that a company needs to have. Very often you're going to see defensive posture where we can defend our rights, but they don't have licensing experience, for example, and they don't go out trying to directly monetize their assets, and sometimes they waste on the vine. And what we try to do, at least for this one, what I do for people I work with here is I align their thinking around inputs and processes directly with Porter's three outcomes. So Porter's three target outcomes are the higher price in the category, the lower cost structure in the category, and unique customer user experiences that they must have. So here's another way of looking at it. This is just another picture, but I'd ask you a couple of questions. Let's see if I can move this out of the way. Go. So who leads your intellectual asset management team? Is it being run off of the corner of the CEO's desk? How do you go about identifying new opportunities for moats you want to build? Do you have a committee that looks at this regularly? How do you go about methodically capturing ideas? Is it just the CEO in their spare time or the CTO in their spare time trying to talk to the inventors? Do you have a methodical system to be able to not just capture them, but prioritize them? And what budgets do you allocate to intellectual asset management? Is it realistic? Is it sufficient? I regularly work with companies that underestimate the long-term cost of patent portfolios, for example. Let's move that out of the way. So last couple of comments. So that's how I would tie intellectual asset management thinking with a competitive advantage. And then to help fund trying to get some of this done, we're in a really fortunate period of time. And there's various groups out there today that'll fund different aspects of your intellectual asset management strategic thinking. And even here, there may be some funding come that might actually support direct filing costs and such, although I haven't seen that yet. So IP Assist with NRC, Innovate BC is rolling something out in the new year. Export Development Canada has export support, and we'll cover things like the cost of patent filings in the US, and Can Export does the same. So on that note, I'll say, do you have any questions?
Not a question, Sean, but if we can add to your list, NSERC Idea to Innovation. That's a specific program from NSERC, which funds the commercialization of principal investigators' invention or technology at the university. And it's a overall grant. It's not specific to IP, but it does cover IP.
Oh yeah, no, I'm well aware of them. Yeah, if we wanted to go into all the grants available for all the R&D out there, I could give you another 50.
Okay.
Yeah,
So that's
but
one
thank you.
that's very specific.
Yeah, they won't cover the cost of IP strategic planning in any way, and they won't cover the cost of patents directly either, that I'm aware of. But anybody else?
They cover the cost of filing.
They will pay for filing, eh?
Yeah. Like all government grants, it's matching.
Yeah. Look into that. Yeah, well, is anybody else out there? Walter, you always got a question. Can't pick on it. Well,
No questions today, because it's, I've been through a lot of this stuff with you over the last few months, John, so. But it's always enjoyable to hear it again and hear it so concisely. Thank you very much.
well, fair enough. Okay, thank you. Well, good talking with everybody. So yeah, if that's it, I'll stop sharing my screen here. Come on back in.
Oh, now I can see everybody. Does anybody have any questions or comments?
Yeah, I have a comment. Sean, that was amazing. I learned so much in such a short period of time. I really appreciate it.
You're welcome. Thank you.
Everybody, we started a little bit late. I think we missed one slide, but we do record the mind share and it's posted on our website after this. So just take a look at it, look for it probably within another week and a bit.